Hello everyone, welcome back to our Accounting 210. In this video, we continue with learning objective 3.6, preparing journal entry. So last time we did the first thing, basically we covered direct labor, direct material. We said when you have those direct labor, direct material, you can go to working process directly. But for manufacturing overhead, we talk about three types, right? In the journal entry, we look at indirect material and then indirect labor. We look at the other manufacturing overhead. We said what should we do is we first put in the manufacturing overhead. It's like a swimming pool. When it incurs, we put more water, so we debit manufacturing overhead. But when you allocate it, we know how much it is, then we put to work in process and then decrease the manufacturing overhead. That is our allocating manufacturing overhead to each specific job. So today we continue with talking about completion of jobs. Let's look at this question. Once the job has completed, what's the keyword? Hey, look at this keyword, right? We talk about is completed. The job is completed. And then we will get our finished goods. It's already completed. Based on your textbook, remember, we have all these numbers there. We have our direct material, we have our direct labor based on your textbook. So we carry all this number from your textbook. We have direct material, we have direct labor, we have manufacturing overhead. This is the allocated one. So you add those three parts, you get the total job cost, and we totally produced 60 units. So each one we got 1,800. Okay, so how do we do our journal entry? When you complete the job, what will happen? You will not have working process because it's already finished. So what you will have? You will have finished. I don't know why it came here. You will have finished goods, right? You will have finished goods. So you will not have any working process because it's already completed. So we have finished goods. How much? 1,800. And we credit what? Work in process, because it will not be working process anymore. We have to write it off. Change it to finish the goods, okay? So textbook give you the explanation is moved off from the working process and goes to finish the good warehouse. So it's finished status. It's not sold, so it's not cost of goods sold yet, but it's not working process because it's already have finished. So what put the summary here, kind of give you a general idea. How does the flow of the cost be in our manufacturing department? So we said you first have a direct material, right? So when you have a direct material, it goes to work in process directly. When you have a direct labor, it goes to work in process. When you have indirect material, indirect labor, so you have indirect material, indirect labor, and then you have other manufacturing overhead. All these three parts, it goes to manufacturing overhead first. And then, so this is when it incurs, right? So when it incurs, we increase our working process, manufacturing overhead. When we allocate it, it goes to our working process. So your total working process. We'll have what? We'll have three parts. When it's working process, when it is the work in process, it will have a direct material. It will have this direct material. It will have this direct labor. And it will have allocated manufacturing overhead. So all these three parts, I make up a number, okay? I make up a number here. It's definitely not the number in this exam. I make up a number. I just say, hey, maybe it's $10,000. I make up a number here. This is just the number I made it up. It's not from the textbook. It's not from anywhere. I made up this number. Okay. Now, once you finish, it will not be working process. It will not be working process. So we want this account to be 0. We have to write it off. We have to write it off. So we have to credit. We have to credit working process. Where does this 10,000 go? It doesn't disappear, right? It must go to somewhere. It went to finish the goods. It went to finish the goods. So our finished goods will have this $10,000. So your direct material, direct labor, allocated manufacturing overhead first goes to work in process, and from work in process to our finished goods. From finished goods, we said once it's sold, it will not be finished goods. Why? Because it's already sold, right? Finished goods is the part finished in your warehouse. But once you sell it, it's not in your warehouse, it's already sold. So we also have to write off this 10,000. Where does this go to? Where does this go to? It goes to cost of goods sold. It goes to cost of goods sold. So that 10,000 goes to our cost of goods sold. That 10,000 goes to our cost of goods sold and became our expense. So this is the flow: direct material, direct labor, allocated manufacturing overhead. We got working process. It changed to finished goods. Once it's sold, it became a cost of goods sold. Okay, so I hope it kind of helps you to understand how do you get the numbers. I hope it kind of helps you to get these numbers. This question gives you the number directly, but you may have a practice. You have to calculate all these numbers by yourself. So hopefully you understand how does it work. Next one, sale of units. Okay, now sale of units. We just, to make it simple, we assume that you only have one sales. When you sold this, total cost is 108,000. So the cost is 108,000, but you sold at 190. So what will happen? If you still remember your financial accounting, you should know when you have sales, there are 2 journal entries. The first one is you have the sales of 190,000. You have a sales of 190,000. You sell on account. So what you should get, you have an account receivable, right? You didn't get cash, but you have account receivable, and then you have your sales revenue. How much did you sell? 190,000, 190,000. That step, we recognize you have the sales of 190,000. And what we will do, we have to get our cost of goods sold. Remember, when we finish, now we are selling it. So we have to have our cost of goods sold. So this one, we take care of the cost of goods sold. We debit the cost of goods sold, we credit finished goods. Okay, so now this is the second part, is we have our cost of goods sold, 108,000. Then we have our finished goods, 108,000. We write it off, our finished goods. It's not in our warehouse anymore, so we have to write it off. From this part, we take care of this 108,000. Now you can kind of get the general idea. He said, why 190? Why this is 108? Why? You tell me why. Because you definitely sell more money than the cost, right? So you have your revenue, 190,000. You have your cost of goods sold, 108,000. What you will get? Gross profit, right? You will get a gross profit, 82,000 from here. You minus all the operating expense, you will get your operating income. You have to sell more than the cost. The difference will become our gross profit. Does this make sense? When I learned financial accounting, I didn't really understand, but you practice more, you will get the logic there. The next one, talking about operating expense. So remember what is operating expense? Those are also called as our period cost, right? So those are also our period cost. You learned this kind of in chapter 2, chapter 3. All of the parts in value chain except for the production and the purchase will be the period cost. So what you have a sales commission, we highlight together, you have a sales commission, office administrative, research, and all these. So you also have an office quarter of the rent, and then you also have a bill for its advertising. Okay, so you have 3 things, right? One is general administrative kind of 20,000, and then you have a rent 3,300. You also have a marketing expense 9,400. And you will make a payment later. So those are the operating expense because these are not product cost, is the period cost. So we just expense them directly. We have a salary expense 20,000. We have a rent expense. How much? 3,300. And then we also have advertisement expense 9,400. So you have all these salary payable. So all these will be payable on the credit side, just 20,000, and then rent payable. Sorry, you can work with me or you just wait, right? Advertisement payable, 9,400, right? So those are just the operating expense. It has nothing to do with our working process or our finished goods or blah, blah, because those are just the period cost. All costs incurred outside of a manufacturing function will be expensed in the current month. So this is the operating expense. Okay, we are almost there, right? We have one more step talking about closing manufacturing overhead. Remember, we said the manufacturing overhead is a temporary account, right? We said it's kind of like a swimming pool. Remember, I always say that when it incurs, you put more water. When you allocate, you get water out. So this is just like a temporary pool. When it incurs, that is your actual manufacturing overhead. When you allocate, you have this allocated manufacturing overhead. So you have to know 2 things. For your manufacturing overhead account, is an account. If you have account, you will have this T account, right? Left side is debit, right side is credit. Your allocation is always on the right side. Your actual is always on the left side. So actual is always on the left side. Actual is always on the left side. So when it happens, you always debit manufacturing overhead. When you allocate, you credit manufacturing overhead. This is important. The way you have to remember is your actual is always on the left side. This, you will see this, we will use this rule in chapter 9, 10, you know, actual is always on the left side. Actual is always on the left side. Repeat it with me one more time. Actual is always on the left side. So you have the actual manufacturing overhead 17,000, but you only allocated 16,000. So kind of you put 17,000 water in the pool, but you only get 16,000 out from this pool. So your allocation is under allocated or over allocated. Kind of you actually is 17,000, but you only allocated the 16,000. Did you allocate enough? Yes or no? You didn't allocate enough. So it's under allocation. So first we will go back to this one more time, but kind of know it's under allocation because your actual is more than your allocated. So it should be 17,000, but we only allocated 16,000. Remember, how do we get our cost of goods sold? cost of goods sold we said is from finished goods. How do we get finished goods? It's your direct material, direct labor, and allocated manufacturing overhead. So it's very clear we under allocated. Okay, we under allocated by 1,000. We under allocated by 1,000, which means our finished goods is under costed by 1,000. So our cost of goods sold is undervalued by 1,000. So what we should do, we have to increase our cost of goods sold. We have to adjust by 1,000 and then credit our manufacturing overhead by 1,000. Your left side is 17,000. Your right side of the allocation was 16,000. Now you credit another 1,000, right? So you credit another 1,000. Now total 16,000 plus 1,000 will be 17,000. Debit 17,000, credit 17,000. We finally can close this account. Because it's temporary account, we want to be 0. So you have to credit manufacturing overhead by 1,000. And what do you debit? You debit the cost of goods sold by 1,000. This is the adjustment. Okay. I'll save this a little bit. We go back to manufacturing overhead in the next video, I hope last video, and then we talk more there. But overall, make sure you read all these statements. Make sure you read all these statements. I'll just skip them because your English is better than me, right? Your English is better than me. So I save all this to yourself. Now we can finally do the income statement. Our sales revenue. So if you don't mind, we go all the way back. I'm sorry, you have to go back and forth. So if you go to our sales revenue is 190,000. At this, our original cost of goods sold is 108,000. But remember, we adjusted, right? We debit another 1,000 there. So our cost of goods sold actually should be 109,000. And then we got our gross profit. So I changed it here. Sorry, I can change it here. We cost of goods sold, we said we did an adjustment by another 1,000. Right? You still remember, I hope you still remember here. So our adjusted cost of goods sold should be 109,000. Therefore, our adjusted gross profit will be 81,000. Our adjusted will be 81,000. And our operating expense, remember we have all these 1, 2, 3. You add all this together, it's 32,700. So 32,700. You get your operating income is 48,300. 48,300. So now you get your operating income statement. You got your income statement. I'll put here one more time. Your revenue is 190,000. Cost of goods sold, it was 108,000 before the adjustment, but we under allocated 1,000, so we have to adjust by 1,000. Our adjusted is 109,000. We get our gross profit is 81,000. We minus all the operating expense, 32,700. We get our operating income should be 48,300. That is our income statement. That's our income statement. Okay, I stop here. As I say, this is definitely important part for chapter 3. Students at the beginning, they kind of struggled a little bit, especially if you don't have a good memory with your financial accounting. I strongly suggest you to read textbook, even go back to your financial accounting notes and textbook. Very likely, I will say you definitely will have a question, at least multiple choice from this part. You may even have a quiz or problem from this part. So make sure you read textbook, watch the video. If you still have any question, watch the video or the demo in the Mark Accounting Lab and email me with any question you have. I'll see you next time, and then we just have a little bit of part left for the manufacturing overhead. So see you next time. Thank you.